everyone. This is Becky Nguyen Evans with RED&COMPANY of Keller Williams Realty. I'm really excited to have Holly Walther here. She is with Success Mortgage Partners, and many of you may actually already know Holly. We've been working together, helping our buyers achieve home ownership, as well as she's helped so many of our clients with taking advantage of the refinance. She's been a mortgage officer for over 20 years now here in Atlanta, and she is one of the top producers as well. And she actually has 100% closing record on pre-approved loans, which I think is really important to share just with the climates. We both have been through market shifts, and yet she's still always been able to keep her word and get our clients to closing when she said she's able to. So Holly, did you want to add anything before we jumped in?
Yeah, thanks. So super excited to be here and kind of give y'all an update as far as what we're seeing in the market. Always honored to have the opportunity to work with Becky and her clients over the past 22 years. As I'm sure you're all aware, she is the best of the best, and just truly honored to be her partner in this crazy world we work in.
Yes. So let's go ahead and jump in. So we've got about 30 minutes.
Okay.
You know, I'm sure that you are as well, but we've been experiencing an increase in the number of calls from clients as well as people that are important to them, asking questions about the CARES Act and really, you know, trying to figure out what their options are with regards to mortgage payments during this time, as so many people have lost their jobs or are currently being furloughed. So I just wanted to take the time out to really ask you questions around the CARES Act and try to share as much information that we have to date about, you know, really what opportunities and options are out there. So how about let's start with exactly what the CARES Act is specific to current mortgage holders. Can you give us a brief explanation about that?
Yeah, so as we know, due to the current state of the market, with unemployment numbers rising, the COVID, the economy being shut down and at different levels in different areas of the country, the federal government had to come up with a plan to assist homeowners out there during this time. So they came out with the opportunity that anyone, as long as they have like a conventional FHA, VA, USDA, a federally backed loan, could request a forbearance. The time period is anywhere from 3 to 12 months, where they have the ability to not make their mortgage payments during this time of personal need.
Okay, so can you clarify the difference between really what forbearance is so that people understand what that means?
Absolutely. So we've seen a lot of things out in the market that there seems to be some confusion. Forbearance is just what it's called. It's forbearance. It's not forgiveness. So although you have the ability to not make those payments, it doesn't mean that those payments are never going to have to be made. It's not crystal clear as to how those payments are going to be required to be made. There was some speculation early on that in the event that you missed the first 3 payments, you took advantage of that immediately, that all 3 payments would be due on month 4 when your 4th payment was due. We're not seeing a lot of that. Most of what we're seeing is that in the circumstances, whatever number of payments you skip, that amount of payments will be added to the end of your loan term. You are still charged interest on the money that you owe during the time frame. So again, it's a forbearance. It's the ability to, provide you the ability to not make payments during this time of hardship, but those payments are going to have to be paid at some point, whether monthly, whether they recalculate your payments, or on the end of your term, which is the speculation that that's what most people will be doing.
Okay, so obviously, like you said, there are a lot of changes that are happening out there, and this is something that most people have not had to request. So any specific advice to them when they are talking to their servicers or whoever holds the mortgage right now? Like, what does that conversation need to look like for them to ensure that they're also protected in the conversation and not assuming that these regulations that are constantly changing could end up hurting them, down the line?
Absolutely. So I think what a lot of people don't understand is early on when this first happened, the number of calls servicers were receiving were astounding. In the beginning, we had people saying they were on hold times, anywhere from 3 to 6 hours. We were even experiencing that as mortgage professionals when we were calling trying to get payoffs for refinances and other things. So what was happening earlier on is when you were calling to get information about forbearance, if the word forbearance came up with your servicer, lots of people didn't realize they were automatically put in forbearance. So right now, 6.5% of people in the United States are on forbearance. Coincidentally, only 4.5% of those people are actually taking advantage of the program. So that means 1/3 of the people in forbearance are in forbearance, but they're still making their mortgage payments. So what's been happening is they were calling to request the information, and when they said that word, due to the call volume, they were automatically pushed into a forbearance program, and then they were on to the next call. So it would be my recommendation, like with anything, get it in writing, know who you talk to, get names, phone numbers, extensions, document, because things are changing so abruptly and quickly that you need the documentation and really need to understand to whatever, the terms are that you're agreeing to. Because like I said, a lot of people, depending on where you're at in the term of your mortgage, let's say you only have 12 mortgage payments left and you skip 3. Well, then on that 12th mortgage payment, you're essentially going to be responsible for 4 mortgage payments at once. So you really need to understand, what you're agreeing to and get it in writing so you have the backup documentation.
Okay, perfect. So I know that you mentioned that when people call in, they're automatically being put into the forbearance program. Is that all loans that's a possibility, or what specific loans are actually eligible or being considered during this time?
Yeah, so what it's going to do, it's going to be all your traditional financing options, your conventional, your FHA, your VA, your USDA, all your traditional financing, none of your like non-QM products. So any of those specialty type products that we were seeing pre-corona that we had the ability to do, and we are seeing some of those come back, we're not seeing those are falling under those forbearance guidelines.
Okay.
Just all your traditional financing.
Okay, really all the traditional financing perspective.
Mm-hmm.
What if you're somebody who bought, and had a tricky mortgage that might have had some private financing, and it was still considered a conventional loan? Can they assume that, that loan qualified? Because my understanding is the federally backed loans is really what is being considered.
We're referring
How
to.
does that apply?
I mean, like with anything, it would be hard for me to speculate. I just strongly encourage anybody that finds themselves in this situation, they need to, get on the phone with their servicing lender. They need to understand what they're eligible for. Again, you may experience some longer call times, but it's, it's imperative that you take the time to really understand and don't make assumptions as to what is available to you.
Okay, perfect. And so, I know one of the big questions that I have, even though the CARES Act specifically says that, a servicer is not to report negatively against your credit. What are you seeing from that perspective? And what is your interpretation of that?
Well, really right now, it's really too early for us to tell. I haven't seen any credit scores affected by anyone. We've only had one credit report that we pulled about 2 weeks ago that actually had the word forbearance on it. Most of our clients have been in a position that, you know, fortunately enough, they haven't had to take advantage of this or had additional options that they looked at. With rates remaining low, you know, refinances have kind of filled the gap for some individuals. But I think it's too early to tell. I mean, at this point, they're saying, you know, if you skip the payments, of course, they can't negatively report, but there's also not that activity of that payment being made either. So I think it's just going to take time. But right now, you know, the speculation is that their credit scores should not be affected negatively because they're not going to have any negative missed payments reported on their credit report.
Yeah. And I asked that because what I found that was interesting is that although the government said that they were putting moratorium on foreclosures during this time, I was looking at the foreclosure list, and it's interesting that, you know, obviously the attorneys are still doing their part as far as like advertising and stating that they're foreclosing, even though they're not actually taking the exact action of foreclosing,
Right.
because the number of foreclosures for this past month is higher than, you know, any month that we've seen in the last like 2.5 years.
Wow.
You know, so obviously there's that activity that's happening, and that even though you're hearing that it doesn't hurt your credit, that you don't know 100%, and it's still too soon for us to know whether or not it will based on how it's being reported. So I know that there were also some additional changes that you mentioned as well. So if you're thinking about buying this year or refinancing and you're about to take advantage of that forbearance, because let's say you're thinking that rates may drop a little bit more, and so you're thinking about, let's just go ahead and skip the payment. What are the risks?
Well, what you'll need to understand is that if you take advantage of the forbearance and you skip, let's say, for instance, you skip 2 payments, you know, previously up until yesterday, the FHFA made an announcement that in the event that you take the forbearance, as long as when you go out of forbearance, you've made 3 consecutive mortgage payments, then you're still eligible to purchase or refinance. Previously, we had to have a 12-month payment history before you would be eligible. So that's great news. What people really need to think about, though, is if I'm a seller and I'm listing my house with you, of course, and my house is in forbearance, I need to have a plan B, because it's highly likely you're going to sell my house quickly, but I'm not going to be eligible until I have those consecutive payments and that payment history. So you really got to understand your timing and make sure that you've got your 3 payments made so that you're still eligible to purchase a house once your home sells or refinance.
That's interesting. So really, for anybody who is thinking about refinancing or buying this year, or, you know, in the near future, that you really can't take advantage or should not take advantage of the forbearance option,
I
because
would
that
agree with you
really is for those who are looking at it from a long-term perspective, that ultimately they are just trying to find a solution that could increase their liquidity in the event that they currently are unemployed, truly for those that are in hardship. Because like you said, so many people are calling in to understand not everybody's taking advantage of it. So realistically, with that load, it was definitely encouraged that if you aren't experiencing a hardship, like, don't just take advantage, because you could skip payments in essence during time.
Well, and I think that, you know, in fairness to the public, they really didn't understand it because there wasn't a lot of direction in the beginning. So I even had, you know, some people, you know, call me and say, well, we decided that we're going to plan a big vacation, or we're going to finish the kitchen that we've always wanted to do, so we're going to skip our payments. And we're like, whoa, wait, like, you really need to understand what that looks like, because, you know, things change. Let's go back to February. If we were having a discussion and someone had told us we would be having this discussion now here at the end of May, we would have said they're crazy. So you just don't know what the future holds. So I would encourage people, if you're not in a position where you really need it, then it's not something that I would be taking advantage of. But if you are in a situation, it is there for a reason. And most certainly, just make sure you're getting everything in writing, that you understand what you're agreeing to, where those payments are going to be added, and then what your timeline will be like should you change your mind and need to refinance or decide that, maybe you take a job change because, everything going on in the market, maybe you have to move. So we just want to make sure that you're, safe and positioned appropriately if your lifestyle or life needs to make those changes.
Okay, great. So is there anything else that you think is important for us to share with everybody with regards to the CARES Act as well that I may not have asked you about?
No, I mean, I think we've pretty much covered it. We have put some links below that have some articles for people to review and get a little more information. We've really highlighted the most important parts. Like I said, the pro is if you find yourself in a financial situation that you need this relief, then by all means it's there. And the good news is as the weeks and days pass, we continue to get more information and more announcements. So you have a clear understanding of how this is going to affect you long term.
Okay, perfect. So before I let you go, since people are having to really think through like what their options are, what is your interest rate outlook? Like what are you anticipating as far as what rates will likely do, in the next 30, 60, 90?
Oh, I wish we had the answer to that question, because gosh, we wouldn't be having this conversation. I would be sitting on the beach somewhere. There is a lot of speculation, 30, 45 days ago, when the feds had to step in and purchase mortgage-backed securities, they thought they were assisting lenders, and then the market kind of took a turn because hedge costs increased. Lenders were having margin calls. There was a lot of volatility in the market. And at that time, we were speculating that by mid-May, interest rates on 30-year loans would possibly drop below 3% with no points. We're not there yet. Can we get there? But there are points involved? Of course there are. I think that what I'm telling my customers on a day-to-day basis when we're looking at their overall financial profile, yes, is it possible that interest rates are going to continue to drop? Maybe an 8, maybe a quarter? Absolutely. We just don't know. And I don't think we'll really know how everything's going to look until we continue to move through the next 60 days. And when businesses start opening up and, kind of really get a take on where the market is going to go from here. One thing I am encouraging them to look at, though, is in a lot of refinances, we're getting a lot of appraisal waivers, or people are still being able to benefit on their refinances by current property values and sales within the past 6 months. So as we move into the summer and the fall, we really don't know what exactly property values are going to look like. We're seeing a little bit of stabilization. So each person's situation, we're taking it case by case, but for most people, is it really worth waiting to save an extra 8 or a quarter? Because that's a possibility when they can take advantage of current property values, possibly getting an appraisal waiver and additional incentives by acting now.
So I'm just curious.
I can answer that clearly, but I just don't know.
You just did a refinance for one of my past clients. And part of the conversation that I'd had with them was like, obviously when, the market starts to experience credit crunch and some changes, home equity line of credits, they start to really tighten, or lenders start to close them out. Like, any advice from that perspective? Because there's so many people who are kind of relying on that home equity line of credit during this time as well.
Right. So I think that we have seen a significant amount of lenders and banks that we had accessibility with credit lines come in and really tighten their guidelines. Also, another thing, jumbo loans. There used to be a ton of outlets for jumbo loans. And when the corona hit, a lot of lenders backed out of that market because they felt it was a little riskier. So the equity lines have given us the capabilities to continue to support those purchase prices. So equity lines, are they completely going away? No. What we are seeing is a lot of the like loan to values meaning used to we could go up to 90% of what the property's worth with a combined first and second. On refinance transactions, a lot of them are coming out and lowering the capabilities to like an 80%. So they're losing that 10% window of what they previously had accessibility to in an equity line.
Okay.
So they're not totally going away. They're just becoming a little more restrictive. And I think we'll continue to see that over the next 60 to 90 days. And then I think they'll most likely come back depending on what the market's doing. When this first hit, you know, we saw a lot of immediate changes, you know, credit score requirements, debt to income ratio requirements. A lot of those got really strict really quick. But over the past 2 weeks, we've seen a lot of things that were previously taken away start to creep back into the market. So that's positive news for what options are going to be available for consumers as we continue on.
Okay, no, that's definitely a lot of great information.
Yeah.
Holly, I think that, you know, if anybody has any specific questions for us, feel free to reach out to us. Obviously, Holly and I are both here as a service, you know, to keep you in your homes as well, and to make sure that you're making strong financial decisions, you know, around real estate during this time. So thank you for your time, Holly, and
thanks for having me.
We'll let you go. And if anybody has questions, feel free to reach out to us. Have a great day.
Have a great day.
Bye.